NIO stock is going crazy. It is the day after the earnings report and investors are still clearly unsure what to make of it. During pre-market, NIO was at best around $49, up around 4%, but as the market opened, the stock went all the way down to $42.87. That is a daily difference of more than 12%. Very rare for such a large company. Right now though, NIO is down around 3% or so as investors started to buy the dip. But why are we seeing these crazy movements, and is it a good idea to go into NIO right now after the earnings report? That's what we're going to discuss today. If you're new here, my name is Sam and welcome to the channel. If you find this video valuable, I would appreciate it a lot if you press that like button. It helps out the channel so much. Also subscribe if you want to see more NIO and other EV company updates. We are a fast growing community and I would love to have you on the journey. Now let's get back to NIO. So what is going on? Looking at the stock chart just 5 days ago, NIO investors started selling off due to a report from short seller firm Citron Research, which by the way, in my opinion, was very poorly written and inaccurate in their claims. But regardless, just like that, NIO went from an all-time high of $54 all the way down to less than $41. That's almost 25% down in only one day. I can't stress enough how we as NIO investors need to be prepared for volatility and to not sell off on those dips and instead buy more shares when the stock goes down to something like $41. If you did in fact take this opportunity to buy more stock, I congratulate you, since you would have made around 11 or 12% on that money, since NIO is now worth around $45–46. So where am I going with this? Well, we are seeing similar crazy movements right now as well. Very rarely do I see a stock first be up 4% and then be down 8%. Now, there is in my opinion some kind of manipulation going on with hedge funds taking the volatility as an opportunity to scare investors into selling their stock and then buying it back at cheaper prices, since usually us common investors do not have the power to create such large swings in a stock. And that is why it is so important for us normal people to buy and hold and not to fall into the natural human behavior of FOMOing into the stock whenever it is going up to not miss on the returns and to sell whenever it is going down to cut our losses. As long as you have a diversified portfolio, the fundamentals of the company are the same and you have done your research that NIO will in fact do well in the future, there are no reasons to sell the stock. And in my opinion, the fundamentals of NIO are stronger than ever, and that takes us right to the earnings report. Short-term fluctuations are just noise, but in my opinion, this right here is why I think NIO is going places. So let's summarize the report and also see how analysts reacted to it. Several brokerages have already increased their price targets for NIO following this stronger than expected third quarter. JP Morgan analyst Nick Lay increased their price target to $50 from $46 and maintained an overweight rating. Plus Citigroup analyst Jeff Chung assigned NIO a buy rating and a $46.4 price target, also an increase. Deutsche Bank analyst Edison Yu increased his price target to $50 from $34 and also kept a buy rating on the shares. The fourth quarter deliveries/sales outlook was materially ahead of our consensus estimates and supply constraints appear to be less of an issue than we had expected, Yu wrote in a research report. And now, just a couple hours ago, equities researchers at Bank of America raised their price targets from only $23 all the way up to $54.7, and therefore also having a buy rating on the stock. So for the third quarter, NIO reported an adjusted loss of 12 cents per share on revenue of $667 million, up 146.4% year over year. And the company sold a record 12,206 upscale EVs in the third quarter. NIO had lost less money than expected for the third quarter as the cost improvements helped boost its margins. The net loss for the quarter was $154.2 million, around $0.14 per American depositary share. The company had benefited from better cost controls and greater economies of scale. For the next quarter, NIO said it expects deliveries 16,500 to 17,000 vehicles in the quarter, which would generate a revenue at somewhere between $922 million and $948 million. and deliveries may hit 100,000 vehicles next year, as NIO is planning to raise its monthly production to 7,500 units by January of 2021 from 5,000 this September. So that is right, NIO lost less money than expected, and they managed to boost their margins more than expected, which is arguably one of the biggest areas NIO should be trying to improve in order to really be able to take over the EV market. And it seems like they are doing that really well right now. And that's what we should be looking at, and not the short-term share movements when we decide to buy or sell the stock, and especially not selling during the downswings and buying during upswings, which is just so common for us. The large institutions who are managing hedge funds with billions of dollars in them are certainly not selling. This quarter there have been $69 million of NIO shares sold, but $1.19 billion worth of shares have been bought. Just as an example, we have seen retirement funds from states such as New Jersey, Ohio and California all go into NIO, which is just awesome because they are supposed to be very careful with how much risk they take, and this makes it seem like they don't deem NIO to be too risky for them. We also just recently saw the world's largest hedge fund, Bridgewater Associates, doubled their position in NIO and buying around $16 million worth of NIO shares. So if these institutions don't panic sell at the smallest sign of a negative stock movement, then in my opinion we shouldn't either. So with all this said, I do think it is a good idea to buy some NIO stock right now at its current prices, as long as you are in it for the long term and don't freak out whenever the stock drops a bit. I think NIO will be worth a lot more in the future than what it is right now, and I wouldn't be surprised to see a $150 share price within a year or so. But I cannot see into the future, and I think it is impossible to know whether tomorrow will be green or not for NIO. So the best approach is really just to look past tomorrow and just buy and hold for the long term. So yes, I do think NIO is a buy at these current levels, and in fact I picked up a couple shares myself. This is not financial advice though, so make sure to own a portfolio with many different stocks with different risk levels, and of course do your own research first before doing anything in the stock market. And with that, I want to conclude today's video. If you enjoyed this one, make sure to give it a like to help us reach out to more people about NIO and just show them the case of the stock and the pros and cons of it. A simple thing as just pressing that thumbs up button really does help. Also subscribe if you want to see more similar content, and I will make sure to provide more updates for you. I'm amazed to see just how fast this community is growing and that we are already so close to reaching 3,000 subscribers. So if you watched all the way to this point, subscribe and join us in the journey to try to hit 10,000 investors by the end of this year. Thank you for watching and enjoy the rest of your day.